Good day, fellow investors. Today I want to discuss a value investing strategy, how to start value investing, what to look for when it comes to value investments, what are the key drivers of value investment returns, how to establish long-term goals, just put it into $100,000 portfolio perspective, because I know that perhaps the key factor that investors miss in this market is exactly strategy. For those who don't know me, my name is Sven Karlin, have been investing since 2002, did really well from an investing perspective. Even since I launched my research platform in 2018, I did also better than the market. And let's start here with a few comments. So, how to value a company, what is a company truly worth, 10x earnings, 30 times earnings, everything is worth what someone will pay, and people will pay more for growth. And this is a great comment, because if you look at Facebook stock, so it was 400, then it went to 90, and now it is 736. What's the real value? That's a big question, but value investing can give you an answer through intrinsic value that we'll discuss. It's about risk, paying a fair price for realistic growth. Forget about comparing against a benchmark, except you compare to your desired rate of return. Knowing what you own makes you much more relaxed than owning everything, irrespective of price. Ultimately, it should be called intelligent investing, and that's what we strive to do, to invest intelligently over a life cycle. I wonder if it might be possible to have both a value and growth approach. So that is the key. Growth is a key component of value. You just need to find it with certainty at the right price. And congratulations if you're still watching, because whenever I do value investment videos, my ranking by views is 10 out of 10, but these are the key videos for our value investment community, so subscribe that we reach that 250,000 soon. And let's start with value. We have our intrinsic value table, linked to the video in the description below. And then we have also a comparative value table there, and you can see here how there is Amazon. And now my calculation is that the business is worth 1.2 trillion, the market cap is 2.5, thus double. You say that's crazy, but if I look at just 2 years ago, the stock was even cheaper. That's what is my calculation for an estimated 10% return. However, we also have the value investment quadrant, where we discuss the risk and reward. And value investing is about not taking too much risk, buying the things that you are pretty certain will lead you to your financial goals in the future. And if we eliminate risk from this table, here we are. We have my research platform, ADM, Berkshire, and Treasuries. So if you start investing 100,000 and let's say 1,000 a month, how to build that portfolio? Just a key notion here, we are not eliminating risk. There is always risk, but we try to find good investments with limited downside, long-term risk. A stock can go always up and down, but you're owning the business, and businesses are much easier to estimate when it comes to risk. So let's immediately start with the US Treasury, 3-month US Treasury. Thus you invest now, the yield there is 4.3%. Berkshire is investing everything there, and Warren Buffett is happy with the yield there. So that is something to consider for value investors. If we then look also at Berkshire, Berkshire is certainly a great investment and a low-risk investment, because I know that it will keep compounding for the next decades to come. However, it is a little bit expensive now. It creates, let's say, 40 to 45 billion in value per year, and that value will keep on growing across cycles to certainly 60 billion, especially when Warren Buffett deploys the cash in a good investment. However, it is now a little bit expensive, so I don't know whether this will be 2 trillion in the next 10 years or again 1 trillion. So that would be a P ratio of 15 here, and we will see about that. But there is again strategy. Another risk, let's say lower side there, is Archer Daniel Midland, that's now trading at 46, was trading at 100 almost a while ago, but mind my words, this doesn't mean it cannot go to 30. Everything can happen, especially in the short term. We have seen stocks go up and down. However, there is a good dividend. If it goes to 30, this dividend goes to 6.5%. And then we start talking ownership. You are an owner. So if you're owning something, you start talking, okay, how am I rewarded by owning that business? And then we can start deploying the money into a portfolio. We have discussed two businesses now and treasuries. So let's say that you are a novice, thus your portfolio should be around 10-20 positions because you're still learning. So you start here, you put into treasuries 90K, you put into Berkshire 5K. If Berkshire drops 30%, you buy more, and that is something that you can retire on. Similarly, Archer Daniel Midlands, you can buy more. If it drops, you reinvest the dividends over time. You create a table that you can follow. This is my public table on YouTube, and here are two ideas. On my research platform, there are many more ideas, so if you want 20 positions or 15, better to say, immediately from where to choose, you can check my research platform. And then it's about managing risk, and perhaps it is about your desired rate of return. When it comes to investing, I think that everyone should have a minimum goal of 10%, because if not, it's better to pay off 7% student debt loans or to invest in something or something like that, because going below 10 actually increases the risk of investing. If you don't have any other options, yes, 4% treasuries, and you wait till you find other options. Comparing to the market, again, too risky, because if this reverts the dividend yield to the historical average, that's minus 75% for the market, which is crazy. Value investing is a long-term process, building a portfolio brick by brick, compounding without taking crazy risks. You must reach your financial goals, and markets are crazy. We don't need crazy. We need to compound brick by brick with certainty so that you reach your financial goals. And yes, I have given you just two tiny bricks today, but that's exactly value investing. Over decades, you build a big brick portfolio that does great.